Hi, and welcome to today's interview. Dr. Duru is a blogger, financial blogger who has a huge following on StockTwits, and I really enjoy his blog. I think he has a fascinating mind. The way he organizes his thoughts concerning stocks is always fascinating to me. So I wanted to highlight his blog. Please check it out. And secondarily, check out this interview with him if you're interested in him and learn more about him. He's a fascinating guy. When I was researching this interview, I found a clip from the 1982 where Dr. Duru appeared on a game show. It was a TV game show about video games, and I have a little bit of footage from it here where he talks about how to pronounce his name. So here we go.
First of all, on my right, we have Duru Ahantu. How'd I do?
Well, my last name's pronounced Ahanatu.
I knew it. I just want to know if you knew your name. All right. Let's meet your opponent over here.
Yep, that's me.
Wow, that's amazing.
That was
so how'd you get on that show?
I can barely remember, but back then, my family didn't have cable, but I somehow found out that they were going to do this video game show, and I just applied to audition. And it required my mom taking me over to San Francisco, and they did a initial contestant screening, and somehow I passed and got on the show, and I competed against an older a woman in that show. We both tested well, I guess, for whatever they were looking for. I love video games back then, and as you probably know, video games are much simpler then than they are now. And I just thought it was so cool to be able to go on a show to win prizes just to be for playing video games. I thought I was going to clean up, but I didn't. That's the way it goes.
That's awesome. Yeah, it looked like your contestant was quite a bit older than you.
Yes, she was, which was hilarious. Looking at it now as an adult, it looks pretty funny.
Yeah, that's awesome. That's awesome. Well, I really enjoy doing these interviews because it gives me an opportunity to talk to some of the people that I find really interesting. And a lot of times I find that people I profile haven't been interviewed a whole lot by other people. And that's even more of an exciting thing for me because it's like this huge opportunity, and I don't know why it's that way. And I almost get more excited than some of my followers sometimes to talk to people, and that's definitely the case with you. I really enjoy your blogs and your
thank
posts,
you.
and just the way your mind works as far as your analysis of like current market conditions, what's happening in a particular stock, and the whole process. I think it's really fascinating. I found you on StockTwits.
Post there.
Yeah, and so when did you start with your blog? Was it? It looks like a while back, huh?
Yeah, it's gone through several transitions, but I first started as an email that I would send to family and friends right after the .com blow up in 2000, and I was sending this email because I thought I wanted everybody to know just how bad the stock market was and what could happen in the economy, and week after week after week of not getting responses, I realized that, I think my interest in the stock market is a pretty specialized thing. So I decided to put my commentary up on a website, and I just told people, look, if you want to read about what's going on in the stock market, just go ahead to this link. It was, I was hand coding the HTML. I posted it on, I got a hosted site, and I just did the HTML. I would upload it from time to time, and I was only posting once every 2 weeks or so, and then I just started to like it more and more and more. A friend of mine was doing active trading at the time. This was 2001, and he encouraged me over time to start upgrading what I was doing with with the format of the site. So I don't know if you noticed, but I finally got to the 21st century, the 2015 to 2018 kind of design theme. So I've upgraded the site one more time. So hopefully it's mobile ready now, which was a big problem as the template I was using wasn't working out so well. But anyway, long story short, I've been doing this for a long time, about 18 years, give or take a year. And I just enjoy writing, and this is a great outlet for me.
Nice. Well, were you into trading as a kid? Is that something that you sort of followed when you were younger?
No, it's I knew nothing about the stock market as a kid. Absolutely nothing. The first time I ever owned a stock was through a scholarship that I got to go to college from PG&E, which is our local utility, and Dow Chemical. And like a good long-term shareholder, I actually had the certificates. That was back in the day when you actually had, possession of your stock certificate. And I stuffed them away in a safe place, and I just kept them. But I never traded anything. Ironically, what got me into trading was the whole .com bubble. I had been doing very well in the 90s with mutual funds, and just a friend of mine, again, I was in grad school, a friend of mine introduced me to mutual funds. I mean, crazy that it took me that long to even find out about those things. And I just, I would look into sort of when I should put money in one fund versus another fund, but I don't really call that trading. And then when everything was going nuts in 1999, that's when I first started actively trading stocks, and it was it was a frying pan kind of lessons learned during that experience.
I think it's probably more people than you think started out by kind of juggling between mutual funds. I certainly did a little bit of that
Ah,
back in the
okay.
day, where like that was my first like I reading like Money Magazine or something,
Oh,
and
I remember that. Yeah.
getting one mutual fund, and then there would be certain limits as to how you could like trade in and out of them. But I certainly was into that at one point, and certainly that period of the .com bubble burst is a big time for me, because that pretty much ended for a while my trading career, because I was very active up until that time as a market maker, and I quite
Oh,
literally got caught holding the bag in a lot of Vega, in bunch of tech stocks that just kind of sat there. Like the paper flow just dried up, and we watched the market just every day the indices go down, 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 and like order flow just died. And so I definitely am very intimately familiar with that particular period of time, like 2000 through 2002 or something like that.
oh man, yeah, that was insanity.
Yeah, it was not, and also during that time for us, the floor was going to decimalization and also to computers. So it was definitely a changing time for us, and I guess probably the San Francisco area was big too, with all the tech out there. Is that where you're talking to me from right now? Are you in Northern
Oh yeah, I'm in
California?
the San Francisco Bay Area. That's correct. Yeah, yeah,
Nice. I got to
yeah.
go there as part of my training for about 9 months, and I loved it
Oh,
out there.
yeah, yeah. It's great, great area. Expensive, but it's great.
So are you a full time trader now nowadays? Is that how you spend your time most of the time?
No, no, no. I that trading is a really a side thing for me. I tried once to be a full time trader. I was out of work in 2009. During the depths of the recession. Probably not the best time to try to try to do full time trading, and I just realized it wasn't going to work out in terms of like making enough money to feed a family. So I mean, one day I would like to, maybe in another phase of life. But yeah, right now it's a side thing. And the great benefit of that is that I don't have any pressure, for any certain kind of income level from the trading. But again, I really love it and maybe you could tell this from the blog, I really love stock trading more from the data and the analysis standpoint, and understanding the technicals, market sentiment, pattern, how you can quantify patterns and that kind of thing. That's what really fascinates me the most about trading. And then I write about it, hoping that other people can benefit from that. And I'm hoping some of my readers are making lots and lots of money from some of the tidbits.
Well, I think you set a great example with that, in that most of us can't just go and trade for a living, but we can be active and successful in our endeavors, vis-a-vis the market, without
Right.
having that be our main job. And there's enough time to in the day to you don't have to actively be doing trades every 5 minutes to
Right.
understand the relationship of what's happening in a particular equity and to be
Exactly.
active. Yeah. So
Yep. Yeah,
that's
exactly. Because people usually have this image of an active trader as someone who has 5 screens up in front of them and is just sitting there mesmerized, for 8, 9 hours a day. And that's not the case. You don't need to do that, particularly with the technology that's available now. I mean, you can just set and forget sometimes if you want, depending upon your trade setup. So, yeah.
so. Yeah. There's a lot of time in your blog and stuff where you're analyzing specific stocks. Part of the reason I wanted to have you on is just so that people could kind of get to know, other sort of aspects of you, so that when they are watching your blog and stuff, they can put a face to the name and kind of understand more about you and that sort of thing. And so this is kind of cool in that way. Are you a political person? And do you I know that sort of dominates some people's lives. Is it a big part of your life, politics and that sort of that?
um, Yeah. So okay. So you clarified what you meant by political person. No, politics does not dominate my life. I do care about politics a lot, and I work really hard to try to keep the politics off of the blog. Except when, of course, a particular policy may impact the quality of a trade. And right now, of course, the big political thing that you just can't avoid if you're a trader or an investor is the whole thing with trade policy, and the crazy headlines that go back and forth. So that's probably the biggest thing in politics right now, I think, that impacts my writing for the blog, because I have to take it into account. I have very specific opinions about how that will translate into currency moves, and so on.
What
But
about
yeah, in
the
general, though, I try to keep politics out of the blog because I really want to focus on how to help people make money.
That's been a huge thing for me as well in
Yeah.
having I have a couple Facebook groups that I'm involved with, and also just the YouTube and all that. Is I really try to draw the line with personally not getting into well, first of all, I don't want to if I come out for one side or the other, I alienate half my audience, and if I come out as
Exactly.
neutral, then 80% of the people hate me. So
Exactly.
it's a no-win situation,
It,
you know what I mean?
right. You just won't be able to, yeah, everybody, you won't please anybody, but you'll displease everybody.
Yeah, and it's actually helped me, I think, grow as a person to do that, because it's left me a little bit maybe more open than I would have been possibly. I come from a political family, and they're always squabbling in the background. But there's plenty of other forums to do that besides the market, and I think a lot of people in finance have been able to sort of separate themselves from that stuff to some extent, which is
Yeah, and you really need to, because obviously, if you look at the stock market's performance, the stock market tends not to really care who in particular is in the White House. We've had great bull runs over the last 10. We've had a great bull run, sorry, over the last 10 years or so, and it's crossed a lot of political changes and wins. And if you didn't want to be in the market because you absolutely hated this person or that person, you missed out, and there's no point in that.
well, I certainly like my goal with interviewing is always to get the person I'm talking to reveal as much as they can politically without revealing anything myself. But you were a savvy enough person to nicely sidestep that particular question. But if I can just stay on the subject for one last second,
Sure.
do you think that these midterms are coming up, obviously, and
Yeah.
do you think that, as far as volatility goes, do you think that this is it seems like the average man in the street would say, okay, well, vol's going to crank up right before the midterms, and then it's going to get crushed right after. And actually, we've seen now the VIX looking to make maybe lows of the year or something like that.
It's
Uh,
mind-boggling.
yeah. Do you think that's kind of because of it might be like a contrarian type situation? Or how do you feel about midterms? Do you think we will get a spike into the actual elections?
This always hard to do these kind of prognostications, particularly when the market is already not behaving the way you would expect. And I think the market is going to surprise us. As we were talking ahead of this interview, I was thinking that September was just going to have all sorts of excitement, particularly in volatility, and that there'd be lots to talk about there. And for the most part, volatility has been as sluggish as ever. So I think the midterms are going to surprise us. How they'll surprise us, I can't say. So all I've been trying to do when I look at volatility is just manage expectations such that we will have spikes along the way. And for whatever reason, we have volatility faders that jump all over every spike and really push vol right back down. I think for a while, people have been prognosticating about what the outcomes will be for the midterms, and the market has already gotten used to that prospect. You know, there used to be an adage that the market loved government gridlock. I think that's just one of those convenient adages because clearly there's been zero gridlock the last, almost 2 years now in Washington, and the market has loved it too. So we could go right through the midterms, whatever the outcome is, and the market will just continue doing what it does at this point. That's kind of my expectations, is that the people who are getting all ramped up for some big dramatic move may be sorely disappointed.
Yeah, I mean, there's a lot of people talking right now about we're late in the rally, we're going to crash. I guess that it's always like that.
Yeah, every year, right? People have theories about why the market's going to crash any moment now. And I learned a long time ago to stop paying attention to those. I remember very distinctly the last time I listened to someone with that kind of attitude was, it's so distinctly clear in my mind because it was so hurtful. In 2009, February, E-Trade had a conference, and I can't remember this guy's name. I wish I could remember, but he was a well-respected prognosticator. He was so bearish and pessimistic on the market. He was talking about how the market will never recover, on and on it goes. And it just so happened I was bearish. And of course, being bearish February 2009 was a good thing. And I thought, wow, I must be a genius. This thing isn't coming back. I'm just going to stay short. And I was short through March, right when the market was bottoming. And I wasn't prepared for that dramatic market shift. So ever since then, I just realized that, trying to predict market crashes is just a fool's game. I think I have an indicator that will tell me at least when a dip is not good to buy, and just go with that at this point.
So we established that trading isn't your full-time job, but do you actively manage a number of positions at any one time, or how does it work with you?
Yeah, so I have lots of different things going on. So the vast majority of my money, this would be good for people to know, is in long-term investments. And every now and then in my blog, I try to remind people that I actually do have a longer-term mindset. It's just that the shorter-term stuff is what's most exciting to write about, right? So yeah, I have active positions going on. In the blog, I try to do updates on some of those positions. It's not easy because, again, since this is not a regular package that I'm writing, things just come to my mind and I write about them. So the point of the blog is not to track positions, but to give people ideas that they can run with. But yeah, I always have something going on. I have long-term, different asset classes, dividend plays, options, commodities, currencies, almost the whole gambit going on at one time.
I think that's a great point you make with just reemphasizing to people that exactly what you're talking about at any one given time is not like where you're like all in on, because I'm a sort of a VIX specialist, and with that Vomageddon thing in February, I noticed a lot of followers, unfortunately, were quote unquote all in on, they were like XIV, they had a margined account and they had all their money in it or something like that. And so I've made it since then a point to say very often, look, my long-term holdings are in like the SPI, the SPY, and exactly. or even more conservative than that. And so don't think that you should be betting all your savings on what we're specifically talking about at one moment, because that's not
Right.
the way it's done for long term. This is like sort of a play money type thing or a small amount of money type thing, and long term is a totally different thing, which maybe you should go to, I don't know, another channel for, even, because that's not what we focus on as much. And so I'm really happy that you make that point, because I was feeling a certain amount of guilt right after that Vomageddon thing, that people associated me with the VIX and it had been going all in based on, not that I recommended that to anybody, I cautioned them, but I felt like I hadn't cautioned enough. So
Yeah.
good point you
Yeah.
make there.
And particularly, I mean, you probably know your audience a lot better than I know my audience, because I write a blog, and every now and then people will comment on it, but it's not like I'm talking to people, and I don't know the people I chat with on Twitter or on StockTwits. I don't know how many of them are actively reading the blog. So I would love to get more feedback, because I'm always curious to know how the blog is helping people. I assume it's not hurting people, because usually if someone has a negative experience, they're going to let you know about it.
Yeah, they tend to do that real quick.
Yep, very quickly.
And you have a huge following on StockTwits. What's your relationship with StockTwits? Have you been on there for quite a long time? I'm just pulling up your
Yeah, I think I've been
here.
on there since near the beginning.
Wow.
And we talk about followers. I actually am kind of mystified as to how I got so many followers on StockTwits. I know I got into this thread at one point with some group of people who thought that I had conjured up a bunch of fake accounts and got them linked up. But I honestly don't even know how to do that, much less would want to do that, because it doesn't benefit me. From the stats that I see, there's no direct correlation between number of followers on StockTwits and hits on my website. So there's nothing to be gained there. I like seeing the number, but what it does for me, not much, I can tell. But I'm hoping that at least some thousands of those people are getting some benefit from my posts, even if they're not reading the blog. At least the various recommendations I give from time to time.
Well, you're not the first person that I've heard have similar sentiments to that. One of my friends, David Modell, has a ungodly number of followers. I'm not sure if he has as many as you do, but similar. He's got like in the tens of thousands of followers, and he says it's, as far as he's trying to run a YouTube business and monetize his content, and he thinks it's pretty useless because it hasn't really helped him out, and he's focused on other things at this point. It's nice to see that number of people following you, but he said the same thing. He's not quite sure how it got there or how it's helping him.
Yeah, exactly. I think StockTwits is very good when people join to recommend to them a whole bunch of people to follow. So from that standpoint, I'm glad I'm somehow high on some recommended list. But I think StockTwits has still a ways to go to help people keep tabs on their favorite content creators. Because I can imagine people may be following thousands, tens of thousands of people or something, and are just overwhelmed, right? So any one person like myself, it's hard to be heard over the din or the noise. So
yeah, I've been like on a I've been trying to get my little verification for StockTwits for a while, and they finally gave it to me. And the use of it for me is to try to translate it into getting verified by some other bigger platforms. I've gone to Twitter and said, look, they did it over there. It hasn't quite worked out yet, but that's the plan for me. Yeah, I was reading your website the other day, and could you talk about a little bit about this I don't know how you call it, AT40, and and your sort of your indicator. You're discussing that indicator in the article I was reading. Could you talk about that a little bit?
Sure. So over time, that indicator became really the centerpiece for what I like to write about. And I wanted to be the expert on this indicator. And as far as I can tell, I'm the only person in the blogosphere that does write about this indicator and has analyzed it to the depth that I've done. It's actually called T2108, and it's an indicator from a platform called Warden 2000. It's the stock charting platform I used to use back in the day. And what it does is T2108 tracks the number of stocks, the percentage of stocks that are above their 40-day moving averages. Now, I've never found out why they use the 40-day moving average. It's almost irrelevant the way I use it. I would have preferred a 50-day moving average indicator, but it is what it is. And interestingly enough, I think it was about a year and a half, 2 years ago, a reader sent me some feedback about how hard it was to understand or keep track of what T2108 meant, and really preferred something that would directly say what it is. And I said, okay, well, I'll say, well, it's above the 40-day moving average, so I'll call it AT40. And hopefully that would help the reader keep track and differentiate between what's now AT40 and AT200. And AT200 is above the 200-day moving average, which in Warden is T2107. And that was one of those instances where a reader gave me some great feedback, and I just otherwise would never have known how confusing it could be, because I'm just used to saying T2108, T2107. And I just found it such a powerful measure of extremes in the market. It's not so great in the middle, but when you're oversold or overbought, this indicator has been fantastic for flagging those conditions. And I decided to develop an entire analytical method on how to trade that indicator during those extreme times. It makes it a little bit more dicey in the middle, like a time like now. Actually, now is pretty good too. But when the market's not at one extreme or the other, then there's a lot of there's a lot of more fuzziness in my analysis and a lot more nuances that I have to speak to. But I love it when the market's oversold or overbought, because then I can really, really dig in on that indicator. So that's kind of where that came from. And I don't know, I haven't actually done a Google search yet on AT40 to see whether I have now elevated it to where I got to on T2108, but we'll see, maybe over time.
Yeah, that's definitely interesting. I was wondering, you seem to have a very solid grasp of everything options, and are able to kind of switch between trading equities and trading options really easily. How did you learn about options initially? Like, how did you develop your knowledge of options trading?
Yeah, so I want to say it was during the time when I was trying to do trading for a living. This is again 2009, depths of the recession, and I was reading a lot of books. And I'd said, I'd always heard of this option thing. I'd traded options a little, and I decided, let me buy a bunch of books and really dive in. Bernie Schaefer, I think that's his last name, is a big one in options. So I read his book. I got this big old Bible on options. I watched some webinars and that kind of thing. And I wish I had gone into it for more from the mathematical standpoint. Like, I wish I built my own Black-Scholes models and that stuff. I mean, that's how fascinated I was with this whole concept. But instead, I'm at one level higher than that. But it was through a lot of reading and a lot of experience. And I learned that the manual understanding is actually best. Like, every now and then I'll check things like, implied volatility, historical volatility, the theta, the delta, the gamma, the rho. All that stuff is great if I was trying to build some big models and trade frequently. But I've just developed over time just a more manual sort of, I could just see when something is cheap or expensive relative to history now, just from experience.
Well, I think it's great for people to develop just the skill of being able to use options as a leverage, as opposed to trading an equity when they have an opinion on something.
Yep.
A lot of what they teach about options trading these days, as far as teaching people to trade with options, is to sell stuff in a kind of a intelligent way, but and delta neutral strategies. But when you actually have an opinion on something, options can be even more effective, I think, at as a stock replacement. I mean, just you can take a very specific risk with options. If you know what you want to do very well, then you can do that with options.
Exactly.
Precisely and exactly, yeah, which is great.
And that's what I try to tell people who ask me about options, is that, look, if you really feel that strongly about something, why are you buying all of that stock and taking that, basically I find that when people really feel strongly about something, they hardly think about the risk of being wrong. And I always try to point out that, look, options can allow you to leverage what you really feel strongly about and limit your risk that you're pretty much ignoring at this point. I've had several conversations about this with other people. I even like options. I haven't done it much, but I even like options as a cheaper way of buying stock, for instance, selling a put. It's amazing how many times I've seen just regular pundits talk about how selling puts are so dangerous and so risky, but it's no riskier than buying 100 shares of a particular stock. Even selling calls is not as risky as it seems if you just manage, put a top on your risk. It's actually can be less risky than just going out and flat out shorting a stock if you do it right. So,
well, yeah, like you said, that basic strategy of saying, well, look, this stock is $50, but if it got down to 40, I wouldn't mind purchasing it. Well, if you've got that in your mind and it's going to stay that way for a while, then why not sell a 40 put, or why not sell, and that way you could collect the income every month until the point when and if it actually happens that it goes there. And that's a very simple option strategy that somebody could really develop a whole trading strategy around, I think.
Yeah,
very definitely.
Exactly. Yeah.
I guess people, I was saying, well, if you know what you want to do, then it's great to have options. But what about for people who, maybe they're just getting started in the market and they just don't know what they want to do. They don't feel like they have an opinion on everything, and everything seems kind of risky. And because I know that there's people like that. What would you recommend to somebody who's sort of just starting out in the market to kind of where do they start? It's got to be overwhelming for somebody. Maybe they read your blog and they see you covering several different stocks. They hear about options and they don't really know entirely what's going on. How would you suggest somebody navigate the waters who's just kind of starting out in the market?
Yeah, so I've actually had several people come to me with that exact kind of question. And I always just say, look, if you're absolutely brand new, don't trade stocks. Just make sure you have a base of money that's invested in something long-term and simple, like an ETF. Buy the SPY, make it, whatever, 10% of your assets, and then just get comfortable with volatility in the market, right? And then if you have, again, as we were talking, if you have a specific idea or concept, then we can talk about how you apply that with a particular stock. So for instance, I'm just pulling this out of the air, but if you have a really strong opinion about the housing market is bottoming and it's taking off, which is what I thought back in 2012, hey, look, why not buy some home builders? And sure enough, that worked for certain spurts. But yeah, if you're just starting out, it's best to just stay simple. Make sure that you have a solid base of long-term investments so that you appreciate that that's what the primary purpose of the stock market is. And then once you're comfortable there, then you can start to do the more, the more detailed or more disaggregated type strategies. And again, make that a small part so that it's never a point of stress in your life. I mean, that's something also I think happens to people when they're new to the market is they immediately dive in, get themselves highly stressed out over this and that. And, the stock market, we can't control. We can only control what we do in response to the market's volatility. So people should put themselves basically on a slow path to just getting comfortable with that. Because, there's hardly anything in the real world that matches the craziness of the stock market, right? I mean,
yeah, totally.
It's a whole different universe. I mean, just as we were talking about the midterm elections, I mean, the whole concept of being contrarian is hard for people to imagine. It's like, no, if everybody is positive and optimistic about something, you should not be the 1 millionth person to be positive and optimistic about that. You actually need to give more consideration to the downside or the negative. And the reverse is true. When everybody is negative, no, you don't want to be the millionth person to be negative. You got to start thinking about, well, what is the potential upside? How could things go right? And that's just something that, that doesn't exist too many places in the world.
Yeah, it's also with like sometimes, I think people underestimate the market a lot of times, and that somebody will come up with an idea, and we're competing with some of the smartest minds in the world. Some of these
And
hedge funds
computers.
have like satellites and watching every store of Best Buy if they're covering Best Buy,
Right.
that sort of thing. And somebody will say like, well, gas is only $3 a gallon, and it's really cheap. It's definitely going higher, and or they'll pick some product they like and say, well, I really like Under Armour. I'm going to buy it, without saying, well, maybe it's too high price. Like, regardless of price, they'll just pick something and they'll just do it. And it's like, well, it may be at the highest, whatever sort of metric you want to use to evaluate something. It may be at the highest PE it's been in years, or it may be at the, it may be way overvalued. I think people definitely need to go into the market. It's better to go in there thinking, look, there's thousands of traders out there, and they're all trying to get an edge, and everybody, to make money, you're going to have to take away someone else's money. It's not just like everybody agrees on something and we all make money.
Right.
It has to come from somewhere.
That's another good point. The zero-sum game.
And, it's weird. I was interviewing somebody the other day who he was behind the scenes at Thinkorswim, and he was telling me that many of the retail accounts he's looked at, like the majority of them, are making money.
Oh,
and,
wow.
Yeah, which was sort of contrary to that thing where they say like 80% are losers and all that. So
yeah,
I guess all we have to worry about is if we're making money, really.
Well, yeah, bottom line. But I also think, Jim Cramer, obviously on CNBC and TheStreet.com, I mean, he makes a similar point. So it's good to see that there's some stats that bear that out with Thinkorswim. But, he always makes a point. He always scoffs at that notion that the industry tries to scare the individual retail investor, that there's absolutely no way you could make money outside of giving your money to them to manage for you. Yeah, I mean, again, with the technology and now with information so available now, any individual can certainly take control of their financial future. The information and the help is out there.
And to your point about treading lightly at first and maybe investing in the SPY or SPX, there is that stat out there that the major indices beat most professional money managers. So until you've got your chops up and you've really studied some stuff, why not just go the easy way and buy the SPY? And
Exactly.
you're going to make that, if history is any indication, you're going to make that, 10% a year, say, and you're going to beat out most professionals just by buying the SPY, and you're going to have a lot less stress going forward.
Lot less stress.
I try to talk to people because, we get in our little bubble here, but the majority of people in the U.S. are not saving anything and believe that buying scratch tickets is the way to make millions. And so there's a real gap between like people that are in our little bubble and what the average person in America is thinking about. And so I feel like I have to back up many times and just say to people, look, the first thing you want to do is try to live below your means and start to be able to save and put away that $100 a week or that $50 a week. And that's the first skill you need to develop, is to be able to live below your means and put that $50 in a shoebox. If you can't do that, you need to focus on that as opposed to what esoteric investment you want. You need to focus on living below your means, maybe getting a second job if that's what you need, and being able to slowly save money over time. Because that skill, if you don't have that skill to start with, all of this other stuff is going to be useless to you.
I fully agree. And whenever I see those statistics, it just blows my mind away, because I think, how can so many Americans be doing so poorly with their savings? I mean, and again, just in terms of just trying to, the cognitive dissonance that's involved in understanding just how so many people are living from week to week, paycheck to paycheck. And then you look at the stock market that suggests that, hey, we're in an economy where everyone must be doing, extremely well. Those two worlds I often have hard time reconciling. And you're so right. I mean, if you don't have those fundamentals and basics, you really shouldn't be in the stock market at all. And I talked to a friend about this a few months ago. It's amazing how some people look at the stock market and say, oh, it's so hard to understand, it's so risky. And then as soon as crypto is going crazy, they're jumping all over trying to get buy a few crypto coins or ICOs to strike it rich, or buying, as you said, lottery tickets and not understanding what the true risk reward is of doing that. They'll get so focused on that get rich thing when really, doing financially well is a long-term thing that happens over time.
Yeah, it's almost like having a YouTube channel that says to people, stop buying the scratch tickets and start socking away your money and saving it and slowly learning about the stock market. Yeah, you're going to get no viewers whatsoever. And, dare I even say anything negative about Bitcoin in the last 2 years, and, people are going to flame me and run away. I guess flame's kind of an old word at this point, but it's not popular. And the same being true about saying the market's going to slowly rally and volatility is going to stay low is not a popular thing to say. People want to hear that it's going to be doom and gloom and, the zombie apocalypse is coming. That's what they want to hear.
Yeah.
So it's kind of hard to reconcile sometimes for us as people who like to tell other people about the market. It can be an uphill battle at times, I think, because people want to hear the negative and the excitement, which is the opposite of what we're doing here.
Yeah, and I see it in my numbers. The more negative the headline I have, the more hits I will get, and that's it just never ceases to fascinate me. Even just trying to come up with catchy titles is in itself an art. I'm still trying to figure that out.
Yeah, I've sort of given up on some of those things at this point. I think you have to be yourself. So, but yeah, it's been crazy. I did have one person on who is sort of negative on everything, and I had her on, and I sort of debated her, and but I wasn't going to convince her of anything, and she wasn't going to convince me of anything. But it was kind of fun to have her on anyways. I see YouTubers all the time that have, millions of followers, and every single video is like, buy gold right now, everything's going to crash. So what is your relationship to the cryptocurrencies? Were you ever interested in owning any, or did you own any, or have you traded that sort of sector?
I have a Coinbase account, and it has absolutely nothing in it. And I do check cryptocurrency, mostly Bitcoin from time to time. I've written about Bitcoin a little bit. It just fascinates me from a sentiment standpoint and from a history of bubbles. And, Bitcoin has definitely followed the standard trajectory for a mania. But I do think it's real. I mean, what I tell people who have asked me on my site about my writing on cryptocurrency, I said, look, I'm really honestly just in a learning phase. I've been through, and you, of course, have been through many different waves in the market. And I really feel like this could be a real wave. I just think that when it's viable, it's not going to look the way it looks now. And that's kind of what my relationship is. It's basically in a learning mode. And so I try to learn as much as I can about what's going on in crypto, blockchain, what its viability, what its uses are, try to understand the people who are behind it, their philosophies about financial markets. So I just want to make sure I'm there when it truly becomes a viable investing asset. Right now, it's really just a plaything for speculators and traders. And from that standpoint, like I said, it fascinates me just because of what sentiment does. The way it shows mania sentiment. And like you said, I am also just fascinated by the diehards and the true acolytes, like how they are just so. They also have their own tight bubble. Like they're so convinced that this is the next financial revolution that they completely don't want to hear alternative futures. And that also kind of scares me a little bit because, again, if you're in a position where you're not considering the range of possibilities, you're probably going to miss something important.
Yeah, and for a lot of these people, I envision a sort of a 20-something guy, and for a lot of these people, that they don't have experiences with bubbles and that sort of thing, or trading in any way, and so I think it's become a little bit more obvious to people. over time. I think like if we talked in like January of last year when stuff was just starting to really go downhill, there were a lot more sort of true believers who were. And it was interesting just from the point of view, it's kind of like the mindset of a beginning trader, all of those people. Mm-hmm. And they'd be like, I had a feeling today and I did this. And then and they would sort of negative scalp themselves, and just all this craziness was going on. And it's amazing, the true believers, like you said. And I don't want to just completely trash about these people. I was, I had several friends try to convince me to buy Bitcoin when it was around $3,000, and I didn't. And I also tried to start up a miner when it was under $1, and I couldn't figure it out, and I just kind of gave up. And I wish I had one of them that I bought for under $1, and I don't know what happened to it. It's like there's always missed opportunities.
About those people. There are a few people out there who had Bitcoin a long time ago, didn't think much about it, and have no idea how to get their money. Which is another aspect of this currency that fascinates me, right? Is that once it's so easy, if you're not careful, to just lose your money, and there's nowhere to go to get any kind of remediation. But you're also reminding me, I actually had learned about Bitcoin from the early days as well. And I thought, oh, that's interesting. But I kid you not, it never occurred to me, whatever it was, 4 or 5 years ago, that it was something to buy. Like, I thought it was a technology that someone was working on, and maybe at some point it could become a viable currency, but it never occurred to me it would be something to actually trade or invest in until just this last 12 months or whatever.
Well, it's because it has no intrinsic value, and there's no way to value it. It's very hard.
There's no way to value it.
Yeah,
it's based on what people feel.
Yeah, I struggle with it, and I always want to be short it, and obviously that wouldn't have worked too well for me, but. I don't know if you can short it nowadays, if there's an effective way. I don't think they've listed options on it, but there's a ton of people who've really bought into it. It's amazing. Yeah,
you have to go through the futures, I think. And it's also something, again, because it's a new it's because of its nature, I also would hesitate to short, at least at this level. Again, following the standard footprint of manias, when it goes parabolic, and then you have the big fall down, that's, to me, the time to really consider shorting. This point, it's kind of interesting, right? It's been hanging around this 6,000, 7,000 range for a while. I get a kick out of fast money on CNBC, where every blip is a reason to buy Bitcoin. That's another red flag to me as well, that you have people who come on, and no matter what it is, no matter what the news is, it's a reason to buy. That just sounds crazy to me. There's always got to be a reason to sell and buy.
Or these guys that, it goes down $1,000 in one day, and they're like, I'm so happy because now I can get even more before it goes to 200
I've
grand.
Seen that too. Because they see one day it'll be worth 100,000. That means that no matter what price, anytime I can get it for less than 100,000, it's a good day.
Well, I think part of the reason it fascinates me is because it reminds me of myself being married to certain positions where I was like, I'm sure it's going back to 50, and you get married to certain opinions sometime, and it's hard. It's very hard to shed them. I have some trader friends who are really good at switching gears, but that's something that's been a challenge for me at times. Yeah,
so, it's a lifelong challenge for me. I try, but yeah, every now and then I definitely get caught. I'm like, oh gosh, I can't believe I held on to this thing. What was I thinking?
So what industry is your main gig in?
Internet, cool. Digital media. Yeah.
And you have, I just want to make sure I cover all this groundwork here. So you mentioned to me you have kids, and you're married, presumably.
Yep.
How many kids you have?
2. Yep, 11 and 9. So they're pretty young.
Cool. Awesome.
Yeah.
And
that's been a great thing.
And who is I noticed on your Dr. Duru site, you have like there's like a woman celebrity on there or something like that. What's up with
Fields?
That? Yeah, Kim Fields. Who's Kim Fields?
Yes, you're talking about my larger drduru.com website. So I have a fan site that also goes back about as far as when I was blogging for the financial market. I know it's a very specific thing, but most people have heard of the Facts of Life. people our age range. I'm assuming we're in the similar age range. So Facts of Life, she played Tootie.
Okay.
Tootie Ramsey. She rode around on roller skates.
I remember
And
her. I know who she is now. Okay.
okay,
I'm with you.
yeah. So I love that show. I loved her. We were the exact same age. We were born in the same month. And when so you're gonna laugh at this one. So when the internet, basically became a thing in the mid 90s, I was still in grad school and everybody was doing homepages. Like that was the big thing back then. Everybody wanted to do a homepage and say stuff about themselves. And I didn't want to say stuff about myself. I felt like that seemed odd to just put all your personal information out there in the public sphere. So I said, well, what can I do with a homepage? Oh, I know. I could create a fan site for Kim Fields. I bet you nobody has that. That's what I did. This was 1996, 97. I put it up on the school server. Again, hand coding all the HTML.
That's awesome.
And it's taken off from there. I've met Kim several times. I did an interview there. It's led to a lot of fun stuff. And that's also a site that's gone through several transitions as I upgrade to keep up with current technology. But so that's the short history of that one.
That's awesome. Yeah, I saw Mrs. Garrett died recently.
Oh, yeah. That's unfortunate. Yeah.
Well, I have a younger sister, so I have an excuse for why I was into the facts of life and all those things. So I don't know if you mind saying or not. So how old are you? I can say I'm 46 right now, but what's your age range? You in your 40s, 50s, 20s?
Yeah. So I was right. We are similar. So I'll be 50 next year.
All right.
Crazy. Yeah, I can't believe I'm even at that point, but that's that's where I am.
Nice. Cool. Well, I know that I know we're a little pressed for time in this, and but I do appreciate you coming on and sharing a little bit of stuff. It's kind of, I don't know, I've gotten more into that sort of like either Joe Rogan type interview thing where it's fun to have someone just come on and just talk for a little while. And I feel like this has been that sort of situation, which is great because people can see your analysis of Apple on any given day on a blog. So it's good to actually kind of meet you in person and just ask you a couple sort of more normal questions for a second.
Yeah, sure. And thank you for having me on. I honestly, as you can probably tell in my messages to you, I didn't know why you wanted to interview me, but I really appreciate you feeling like I had something good to say to contribute to your program.
I wanted to interview because I'm a fan. I'm fascinated by, like I said in the things, I'm fascinated by the way your mind works and your posts, and it just seems you have a very sort of organized way of thinking compared with mine, and it's just, it's always a pleasure to read your blogs, and I wanted to highlight your work so that my followers would check it out because I think it's really valuable, and you've been spot on a number of occasions, and I'm sure that there's tons and tons of people out there that have made money based on reading your work. So on behalf of everybody, thank you very much, and hopefully you'll keep doing it for a long time to come.
Yes, please. But thank you, Dave.
Awesome, and thanks to everybody for watching today, and we will see you in the next one. I will leave links to Dr. Duru's sites in the description, and you can come check him out, and please do, and please subscribe to all his posts and blog, and even on StockTwits, although we're not quite sure what that does.
Exactly.
Apologies to StockTwits. All right, thanks again, and thank you for watching, and we'll see you next time.